All right, welcome in to Market Day Report. Thank you very much for joining us here today. Hopefully you take us with it, you or us with you wherever you go. We like being on in the background someplace, the shop, the barn, the garage, maybe even the office. But really what you want to know is you want to know the prices, because that's going to be your revenues. That's your money. You don't need me blathering on. So let's get to it, right? Let's talk about what we've got going on in corn. Well, we're off anywhere between, say, 1.5 to 2.25 cents. So not a lot happening there. Right now, we're just a tick off the low of the day, though. 4.18, no, we just ticked up. 2 ticks off the low of the day. 4.19's last. That's a half cent off the low of the day and about 5 cents off the highs. So you can glean from the fact that we have a 5.5 cent range. We're down 2 cents. March is down 1.5 cents to 4.36.5. That's a penny off the low. And I'm going to call it about 4.75 cents off the high. So corn, again, down between 1.5 and 2 cents across the board. Pretty lackluster trade. Let's take a look and see what soybeans have got for us. Something similar, but in a soybean kind of way. 3.25 to 5 cents lower when we're talking about the beans. Nova's down 5 cents. Most of the losses are up front. 10.14 is last, just 2 cents off the low of the day, and about 10.75 cents off of the high. So we're again trading weak as we speak. Jan, that's down 5.25 cents. The price in Jan 10.31 3/4, and again a similar range, about 12 cents there. So that's soybeans. Let's take a look at wheat in Chicago, the Chicago wheat market. That's 2.75 cents better. We have a little bit of a green on the screen when we talk about Chicago wheat. Dees stands at 601 3/4. We got a 6 handle in front of that thing, finally. But we have been much higher. We've been about 7.5 cents higher than this. So we've kind of given back a lot of those gains and trended back down towards the low of the day. We're only about 3.25 cents off of it, right? Now we're just 3 cents off of it. March wheat in Chicago is up 2.75 cents to 6.25. There you go. Let's take a look at the hard red in Kansas City now. Let's say 3.5 cents better there in the Dees to 6.12 1/4. We got March up 3.25 cents as well to 6.28 1/4. So not too bad. We've got okay ranges, about a dime, maybe just a little bit more in Dees, 11 cents there. And that's the hard red in Kansas City. We're up anywhere between 1.25 to 3.5, with most of the gains coming up front. That's the hard red. Let's take a look and see what the spring wheat's got in store for us. This is Minneapolis. We've got a December board, sharply unchanged, 6.48 1/4 last there. We've had about a 9.25 cent range. We're right towards the low end. I guess we're only about 2.5 cents off the low. We look at the March, that's down a penny to 6.67 3/4. So not a lot happening there. Even in May, one more month out, that's unchanged as well. 6.79 3/4. Not a lot happening in Minneapolis. Let's get to the cotton. We'll get to our next guest analyst. Cotton down 7 ticks. Very, very quiet trade. Or 6 ticks. Let's go there. 72.19 is last, and that's the Dees cotton, down 6 points to 72.17. All right, let's get in, bring on our next guest analyst. That's going to be Mr. Joe Barker. He's with CHS. Joe, thanks for being on. All right, brother. Not a lot of time. Anything really jump out of you there?
Well, I mean, it's pre-report positioning going on in our grains here today. If you're looking for surprises in this report, I mean, that comes out tomorrow. Analysts are looking for a small decrease in the corn yield. That is counterintuitive to what we're hearing from our customer base. Corn yields seem to be exceeding expectations with a lot of our customers. So there's something that could be in there tomorrow. But I think we also, Scott, need to talk about your go-tos that you talk about some, and be talking about oil. Oil's making a run right now. We're on our highs of the day. Crude oil's up 215. That could bring a little bit of buying into the other commodities as we get a little spillover support. And I did want to mention option volatility is pretty low going into this report. Depending on what strike you want to look at, we're in the 18.5% volatility on December corn. So if you have positions to protect, it's something you could think about looking at.
Yeah, I mean, it's incredibly cheap, I think, and it gives you a great opportunity. If you want to sell something, you can, and you can re-own it via the options, and it's not going to really cost you an arm and a leg, right?
Yeah, it's a simple marketing plan, and depending on what growers are looking at for storage or DP rates, utilizing an option as a re-ownership strategy might be a more cost advantageous way of keeping ownership of that crop and eliminating downside risk.
Yeah, I mean, that's what you guys do. That's what brokers do all day long, right? You pencil that stuff out for your customers and your producers. I appreciate you coming on and letting us know about that stuff. Hard to disagree with anything you said. Great content as usual, Joe. Joe Barker coming to us from Inver Grove Heights. He's with CHS. We're going to go away. We're going to retool. We're going to pay some bills. We're going to come back and talk more livestock right after this.